So today I'm going to look at another clothing company. I made a little overview review of Levi's yesterday, so if you want to check that out, you can. This one's going to be for LULUlemon, an athleisure clothing company. So without explaining too much about it, is basically it's a company based in Canada. This is the overview page on stockanalysis.com. And they're very popular, especially among the females of our species. I think the male market comprises about 11 to 13% is the estimate. Although Lululemon does not reveal those figures, at least they didn't used to. I don't know if they do now. First, I'm going to talk a little bit about the numbers, going to look at some charts, and then perhaps their positioning in the marketplace, and then maybe give some opinions or issues or areas of concern about the company that I have. So, about the overview, the first thing I like to look at here is the revenue and earnings, and it looks very, very organized. So, it's been growing revenue and earnings pretty consistently. I guess there was a little bit of a dip in earnings in 2017, but the revenue has been growing at a steady pace, even through 2020, which kind of makes sense because people are at home. But it accelerated in 2021. And I don't know, and I'm not of the opinion that the work from home trends are actually, if they're start to reverse, that it's going to have a material negative impact on the sales of Lululemon. I think that this is a long-term trend. So basically, they do a bunch of active clothing, yoga, running, training of all sorts. Let's first go into the financials, and this is the yearly revenue. It's a growth company still, so growing revenue is probably their number one pursuit. And it looks great. I like to look at the quarterly to get a more detailed picture of what's going on with the company. And it looks like it's a very, very steady growth. So it's very good to see. Moving on down to the operating income, it also seems to be growing. They had a little bit of a dip here, I guess, in 2017. But the last quarter definitely pulled the year up, it seems like. Then they had a strong year afterwards, so I'm not really concerned about that. It's fairly smooth. This is one thing that impressed me about the company, is that they're actually buying back shares. So even though they're growing, they're buying back shares and returning some money back to the customer. I'm sorry, not the customer. No returning money to the customer. To the shareholders, to the investors. Other thing I like to look at is gross margin, profit margin. Seems to be holding fairly steady. It's expected to have a little bit of decrease in profit margin. So those are the kind of the income side of things. So on the statistics side, the market cap of the company is 38.4 billion and the enterprise value is 38.65. So that tells me that they have a little bit of debt. Let's see if we can find that debt here on the balance sheet. And the net cash is minus 255 million, which is very negligible. I mean, they still have plenty of working capital. It's really nothing. They basically have no debt. Other ratios I like to look at: EV to earnings, EV to sales. It's fairly high. And also, I like to look at the price to sales ratio. Now, this is going to be my main point of contention with this company, is just simply the valuation. It's not so much that they're not a well-run company. Okay, I think that they're doing really well, and they have been doing really well. And they're well worth buying. The only problem is at what price target, right? At what price would you pull the trigger on there? So in order to do a little bit of examination on this price target, I wanted to look at some things about the company. So first of all, I typed in, Lulu merchandise sold to men in Google. I wanted to do some homework. And this is the kind of stuff that I got. This is a little bit concerning to me. I mean, I can't see myself ever wearing the first two items per se. Someone might, but their men's gear from a personal standpoint is a little bit questionable. So I went to the website, and it's a little bit a different approach than Levi Strauss, Levi. I don't know. Had just regular people as models, and it was very relatable. But all the models here on the Lululemon website are very good looking, very athletic. So they're taking a little bit of a different approach, which is fine. If I scroll down, you'll see that everybody's, in shape. She's probably some kind of an athlete that they hired out. I mean, they're supporting. I'm sorry if she's famous. I'm not familiar. I mean, even this dad is pretty good looking, right? It's very, very fit dude. And this, the Asian model, the black guy, they're not like overweight or anything like that. So very interesting. Even this chick here, look at this dude. That vein is enormous. It's like as big as a finger. It's about to pop out of his arm. So I mean, he looks good in this gear, that's for sure. So I guess they do have some good stuff. But let's take a look. The website is easy enough to maneuver it. I mean, it's kind of very similar to Levi's and other clothing brands. So here's the guy with the no legs. I guess he's another athlete that they have their relationship with. And everybody looks great. But this clothing is like, I don't know. But they make all kinds. I like these shirts, by the way. I've worn something similar to this. I do think that they still got a lot of work to do in order to penetrate the male market. What I think they should be doing, though, is instead of I think they should do the opposite of what Levi's did with trying to expand into athleisure. What Levi's did is they purchased a yoga brand, right? Beyond Yoga or something like that. And they try to, grow that so they have some kind of exposure to the market. And I thought it was a mistake to not put the Levi's logo on their athleisure gear, because I think if you have some athleisure that looks like denim or something, I think it'd be a cool angle, and I think you can carve yourself like a little niche in the marketplace. But I think Lululemon's doing also a mistake, but in the other direction. I think they should actually have a different brand for the male side of things, because Lululemon, just the name, I don't know how many guys, I mean, a lot of guys don't care, but some guys will care. That they don't want that clothing that's associated with, like, girls' butts or something to be worn by them. And I think that if the company owns a different brand that it's appeals more to the male side of things, I think they'll do even better. So I can see them struggling. I'm sure they're putting a lot of effort, and they are putting a lot of effort into growing their male audience, but I think that's going to be just a core roadblock. Personal opinion, of course. So moving on, I looked at competition, right? And here's their competition. Let me see if you can see any of that. Okay, now you can. So Athleta, Victoria Sports, Under Armour, Nike, Adidas, etc., Puma, Sweaty Betty. I think that's a British company. Yes, I would never wear Sweaty Betty, for example. But I looked at Under Armour because I wanted to look at some of the competition. It looks like that's one of their biggest one. And I wanted to look at what it's like as a company relative to Lululemon. Scrolling down the chart, you can immediately see that it's not a very well-oiled running machine. Not nearly as good as Lululemon. I mean, they had a losing year here, no profit, negative profit. Losing year here, negative profit for not much revenue gain. Barely made it into the green. 2019. Huge losing year in 2020. Didn't make up for it in 2021. So already I can tell that this company is not, it's struggling, right? If we look at the revenue, let's go quarterly because it gives us a little bit of a better picture. The quarterly revenue has been growing between 2012 2017, but then it kind of stalled and it's been even since then. Operating income it's struggling to survive. I mean, they had a negative quarter in this recent quarter. They lost money there, so that's really bad. Shares outstanding looks like they're diluting overall. So the opposite of returning value to shareholders, they're using it just to survive. And then if we go to the statistics, we got enterprise value. So that means they're a little bit of in debt, but it starts mattering when it's a smaller company. Price to earnings ratio is 21, still pretty high. Price to sales 0.85. That's probably in line, but that means their profit margin is probably really low. Let me see. Yeah, so the profit margin is really low. It's 3.89%. Compare that to LULULemon. I mean, nowhere close. So, they've gone from a well-respected brand to one that's willing to cut margins quite a lot, just in order to keep the revenue, the top line up. So, that tells me about the competition. LULULemon has apparently about 60% market share. I think I'm not sure if that's in the US or worldwide, but Athleta Gap has the next highest, which is at 21%. So, I mean, that's one thing. It's like they have quite a large market share, so they're going to struggle to gain more market share, probably because competition is going to be pretty intense. However, they don't have to play that game. LULULemon can just try to expand the category, right? They can expand the pie, and therefore, when they have a bigger portion of the pie, they win more. So that's got to be their strategy. They need to be promoting athleisure, like in other continents, like go in Africa or, Indonesia. I don't know where they're expanding into, but I know that they're not very well known in Europe, and they're struggling to break through there. But perhaps I think probably Southeast Asia would be the place to go for them right now from a cultural perspective. But they're gonna have to do some work and design some really good stuff. But as far as the company goes, I think it's a buy. I'm sorry. I think it's a really good company. I jumped the trigger on that one. I think it's a really good company, but if we look at the price action and pull it out a little bit, it's experienced a pretty big rise. I mean, it's appreciated since 2008 by 2,000%, which is quite high. And currently it's trading at a PE of 40. Now, if we assume that the company is going to continue to grow, then that's not too bad, but you're going to have to wait for, maybe 5 years before you start getting your money back. And that's quite a long period of time. Just to give you the graph here. I picked that around 473. Now it's at 300. Even at 300, it's a little bit questionable whether I would buy this at this moment, but it's not horrible. Like if I park some money there long term for 5 years plus, they're not going to expect the price to appreciate, especially since LULULemon is returning some capital to shareholders through their buyback program. So that's probably why this shares have appreciated so much in value over the last, especially 5 years, because they've been buying back shares, and they should be. I mean, they're making money more than enough than they need, and they should return that to shareholders. But it does, I think, maybe present a little bit of a buying opportunity relative to what the market's willing to pay for it. Like, I might not be willing to pay 300. Maybe 250 starts looking really attractive. But so maybe in the high 200s would be pretty good. 300s wouldn't be too bad of a mistake for me. But I might actually use, because the reason I found this company is because I was looking at, the highest premiums available for stock, because I like to sell options. and Lulu was on the list, and so I decided to take a look at the company in case I wanted to sell options against it and get stuck with that collateral. And so I wanted to do some fundamental research in order to find out whether I'd be willing to own the company for some time before I could get my money back, and because I like selling covered options. So that's why I did it, and what I'm seeing is actually really good. Most of this anticipation and high implied volatility was probably due to people expecting the company to bounce up to the upside, not necessarily to the downside. Usually when there's high volatility, implied volatility, people are expecting like downside moves, but perhaps not this time around. So I don't know what the order book looks like or looked like last week. But it was also earnings day, and that's why the premiums were so juiced up. But as far as the company goes, definitely I think I will consider it, especially if it drops a little bit more and the premiums remain high, because they're still relatively elevated to some other companies I like sell options against, like Goldman Sachs. I definitely will consider using LULUlemon as some collateral. If you own the company, let me know what you think about it, how much you own it, what'd you get in, when did you get in, and if there's some news items or prospects that I should know about, please let me know. So you can leave that info in the comments below to help me like make a better decision whether I should sell options against this company. Also, I like to do these little overviews whenever I find a company of interest. Maybe you have a company of interest that you want me to review, or just kind of do a brief overlook, kind of like what I did today. Look at the numbers and try to point out some areas of concern and perhaps give some perspective on the company. Let me know. I'll leave the ticker of the company that you want me to review down in the comments. All right, I'm going to leave it right there. I'll make another episode and update everybody on the account and how it's doing tomorrow when the markets are open. Hopefully. Peace out.